Hey guys, welcome back to the channel. So I recently finished going over the Palantir's earnings press release and the earnings call. And you may be asking, why is the stock down 10%, or at least when I'm making this video? And really, market is hating on any growth company, especially non-profitable ones that are not showing insane growth. I mean, look at PayPal, look at Facebook, Roblox, and many more. So Palantir showed that they're going to be growing about 2% in the first quarter of 2022. They did reaffirm their 30% guidance going forward until 2025, so nothing changed there. And this year was 41%, so well above that 30%, and hopefully that continues, and they're just kind of sandbagging. However, what I would say is this is not a stock that you can look at for quarter-to-quarter growth, and it's not a stock that you should be invested in for a short-term profit. It is very much about believing in the long-term capabilities of Palantir's growth. You have to really believe in the product itself, data becoming the new oil, and Palantir is the operating system for companies and governments in order to extract and utilize that data in the most efficient way possible. And for me, this is by looking at projects like Skywise and how they helped Airbus, and obviously being the operating system for the US government and the military, and knowing that having that investment from the US government going back to 2003 has made them the best in this field. And ultimately, the trust that I have in the management team that they'll really be able to execute over the next decade or so. So I believe that, for example, let's say Verizon is using Palantir, then they're going to have an advantage over, say, T-Mobile, and T-Mobile will realize that they also have to use the platform. But this is not something that's going to be quarter to quarter in the next year or two. This is really a growth story over the next decade and more. And this is why I'm not focused on the stock price. When we do look at the financials, we do see growth. Obviously not to the extent that the market would be happy. Also, earnings per share was shown as a miss. However, I'm not even focused on earnings per share at the moment. In this video, I'll quickly go over some of the financials and the guidance that Palantir has given, and then I'll go over some of the highlights from the earnings call. And I will make another video when I go over the 10K. That will take me some days to really try to extract all the hidden details. So before we get into the video, if you can please like and subscribe to help support the channel. So if we look first at a quarterly basis, we see revenue is at 433 million. This is up from 392. That's a growth quarter over quarter of 10% and year over year of 34%. Look at adjusted operating income. It's 124 million. That's a 29% operating margin. That has fallen from 30, 31%, 34%. However, I would say this is likely due to the added sales team, and adjusted gross margin, 80%. Usually software companies are in that 80% range, so nothing there. Adjusted free cash flow is 104 million, and we see that from last year where it was negative, in every quarter this year, it has been positive. So that's a good thing, and it will continue going higher. We see government revenue was 239 million, and that was growth of 26% year over year. So obviously a deceleration there, which we'll talk about. And it actually was negative from last quarter, minus 16%. And then commercial revenue, that is still growing, 194 million. That is 47% year over year, and it is 11% quarter over quarter. And honestly, for me, I am happy to see the commercial business growing more than the government business, just because I think the total addressable market for the commercial business and ultimately Palantir's future of becoming that dominant company is in the commercial sector. So if we look at now year over year, we see revenue was at 1.5 billion, and that's up from just under 1.1 billion, which is a 41% increase. And the adjusted operating income was 473 million. That's up from 190 million. That is a 31% operating margin. They have a gross margins of 78% for the whole year and a contribution margin of 58%. Adjusted free cash flow is 424 million, which I am definitely happy to see, and I'm sure that will only grow. And that is up from minus 265 million. For the full year, commercial revenue was 645 million. That is up from 482 million in 2020. That's an increase of 34%, and a percentage of revenue is 42%. We definitely want to see that grow to ultimately, I would say, being over 50% of the business. If we look at government revenue, is 897 million. This is a growth of 47% year over year, 58% of the revenue. Two other metrics that I want to look at is cash is now at 2.3 billion. They do not have much debt, so they're in a great position. And if we look at the platform customers, it was at the end of 2020, 139, and now it is at 237. So we see the growth there, and obviously this is one of the most important metrics to continue. So these are all very much the basic financials when it comes to this quarter. And then if we look forward, they're guiding, again, still 30% growth until 2025. The next quarter, they're guiding revenue to be 443 million. So that is only a 2% increase, but again, we can't really judge Palantir quarter to quarter, in my opinion. Now I want to analyze some of the highlights from the earnings call. I was, first of all, very happy to see Alex Karp on the call. I know a lot of Wall Street analysts will judge his type of character. It reminds me kind of an Elon Musk. He's not the typical suited CEO. However, I'm totally okay with this because to me, he seems extremely genuine, and that ultimately gives me the confidence to believe in Palantir's execution over the next decade. So he said, first of all, when it comes to sales, up until now, they were very focused on making the product better, and obviously they're still focused on that, and ultimately the best product will sell itself. However, they did realize that no, you do have to have a sales team that is really going around and promoting the product and showing different companies what Palantir has to offer. And he said right now they have 150 salespeople, but this year they're actually planning on adding 200 more. So this is great. As they expand the sales team, we should see Palantir grow because companies will ultimately see the value that Palantir has. But I would say that I'm very happy, and I always was, with the idea that they're not so focused on just the sales of things. They're really focused on the product itself, because when you're looking at Palantir from first principles, you understand that this is really a product that is unfounded, and its importance is what's going to make it become dominant over the next decade or so. Then he talked about also that Palantir is all about organic growth. So many companies and other SaaS companies are just acquiring other companies in order to provide more products and to integrate them into their own firm. However, when it comes to Palantir, it's all about organic growth, building the different modules from within with the top talent. He talks a lot about having the top talent. He even said that a lot of Palantir engineers who left are coming back because they understand that Palantir is working on the most difficult problems and because of how important their mission is. He also discussed the lumpiness in government's growth because we see there was a deceleration and even a decline quarter over quarter. And he says is always the case when it comes to government. However, if you look back 15 years, the growth rate will be 30%, even if it has that lumpiness. So he says it shouldn't be a problem when you look out, let's say the next year or two, that it should basically recorrect itself. And he said a very important point here is that when it comes to the government, one of the hardest things is the barriers to entry. And Palantir clearly has bypassed this barrier. So that means that they should receive a lot of the contracts going forward, but it obviously depends on the budget at the time. So we definitely have this lumpiness. Then he also talked about stock-based compensation and dilution. This has been an issue that has been talked about for years now, and it's very good that he directly answered this question. And he said, first of all, when it comes to dilution, the company's not planning on offering more shares, like 9 million or so. That's not the issue. But when it comes to stock-based compensation, at the end of the day, this is how they get the top talent to stay. And he said that over the next 18 months, this should definitely wind down. He understands that investors look at this, but he says that at the end of the day, Wall Street analysts are not their clients. Their clients are their customers that ultimately use their platform, and they want to work on getting them the best product. And in order to do that, you need the top engineers. So it's really about focus, but he did say it will wind down, so that's obviously good to hear. But for me, I love the continuous confirmation that they're not just trying to pander to Wall Street, but they're really focusing on the product itself. Ultimately, once the product itself is the best, the numbers are going to reflect that, and then the stock price will also reflect that. He also talked about the product itself, had that based on Foundry, they're going to build many different modules, so different companies could basically link up to the needs that they have. And he says this is ultimately in the making. They continuously work on new products, new modules, and it's really in the infancy stage in terms of providing the necessary data analytics to different companies. They really started with the government, moved on to the biggest companies in the world with the hardest supply chain issues. From here, it seems like they're really moving downstream, and ultimately it seems like they'll have a product for many different company types in different industries, but also in different sizes, whether it's small, medium, or large businesses. He discusses that they have $2.3 billion in cash, they have a sound balance sheet, and this is ultimately because Palantir thrives in difficult times, and then when we get out of the difficult times, they will do even better. But he's basically saying that when you look at, for example, COVID, Palantir came in there, they were able to provide the supply chains and the efficient distribution of the COVID vaccine. And for example, when we look at geopolitical issues at Russia, Ukraine, but even more so later on, China and the US, we don't know what it's going to look like in 5 years from now. Will supply chains be disrupted because of how much we are reliant on China? And when this stuff, if it happens, then this is where Palantir comes in and can really show, oh, if you redirect your business to have the supply chain in Vietnam or coming back to the US and just really help companies through these difficult times, this is what they are born out of. And obviously their balance sheet is important because through these difficult times, they will be able to survive because of that cash and lack of debt. So all in all, I was very happy with this earnings call. He touched on a lot of ideas. Again, this quarter doesn't change my thesis in Palantir. And to me, the stock price isn't too meaningful because I put my money in this company. If it comes down substantially, then I'm willing to buy more. Right now, I have a full position for what I'm happy with, but I'm just looking out for the next 5, 10 more years on Palantir's execution. I hope this video was helpful. Please like and subscribe, and I will see you in the next video.